Recording in progress.
All right, good morning, everybody. It's OpEx. We made it through the week. All right, so these morning briefings are designed to kind of teach you a routine to prepare for the trading day. You certainly don't have to do it exactly the way that we go through it here, but it's a really good format. It's a template to start with. The idea would be you'd want to customize your own and get to the habit every day you're doing these same things, you're doing these same steps. I like to start out with taking a look at what happened around the world. Check the Asian market. How did it do? Was there a particular sector that was leading or lagging? And was there a reason behind that? And then move on over into Europe. Like right now, it's 12:30 in London. It's around lunchtime. Whatever's going on over there very often will drag through into our own market like a contagion. So here on Finance Juice, they do a European market wrap. Now, to be fair, they do a wrap of our market, of the Asian market, and then the European market. So this is a really useful gauge to kind of try to figure out maybe what happened during the day, right? I think we've all seen trading day just kind of moving along, things are fine, and then suddenly we get this big move. And, you ask the question, wow, what was that big move? What caused that? And you look around in the news, you don't really see anything. Well, at the end of the day, when the market wrap comes out, a lot of times it'll have more information about what happened, and you can figure out, oh, okay, so this bit of news that didn't really hit anywhere is the reason that the market made that kind of move. All right. This website also here on the left side has a list of who's speaking today. Now, this list can change through the day, so it's good to kind of refer back. I tend to leave this website up where I can watch it through the day. It'll have alerts, kind of just scrolling right now looking for one of those alerts. You can't miss it. It'll turn red. It's really bright. And when Econ comes out, it'll usually come in as a banner across the top of the screen. You don't need to spend money to have an account here, but it works better if you have an account, right? So it's a free account, just create one so that you can use the filters that are on this platform. See, this is a news aggregate website. It's going to get news from a lot of different places. Well, you may not want news from every place that it has to offer. And if you don't go in and modify any of the settings, you're just going to get a torrent, a flood of news. Some of it may be useful, but it would be hidden through all the extra not useful trash that's coming in. All right, so create a free account and then use the My News button to go in and weed out some of those news sources you don't want. And when you're done checking everything, scroll down to the bottom of that page and hit save, and you're good to go. Considering how many things we had on the books at various days this week, it's a pretty light day today. We have options expiration, which is the third Friday of the month. And consumer sentiment at 10 o'clock. That's two of the, that's pretty much going to wrap it up for us. Now we're down this morning nearly 1%, which isn't bad. But if things get a little out of control this morning, we may see the plunge protection team show up on in the media. So definitely be watching finance juice. When we made it 20% off of the high and everybody exclaimed that, hey, the S&P was finally in, quote, bear market territory because it had fallen that 20%. Maybe you guys remember, maybe not. I remember. This day right there, that was a Friday, and in the afternoon, things were pretty extreme. They had a Fed speaker just show up on Fox Business. Well, I don't watch Fox Business, so I didn't know the guy was going to show up there. There was no warning. There was no heads up, no nothing. He just started popping up into finance juice. And they activated the plunge protection team that day. The market exploded off of the lows around 1 o'clock in the afternoon and just ripped to the upside right up into that close. It was a phenomenal thing to witness, and if I wasn't short at the time, I probably wouldn't have cared too much. But they ran me over and it hurt. Those speakers can show up at any time. They can just pop up on the national system. That day they were on Fox Business. They could be anywhere, right? So just kind of keep in mind that those Fed speakers, just because they're not on that list, doesn't mean they can't go out and start talking somewhere. And we're kind of sitting in a situation where it could get a little out of control today. We talk about higher highs and higher lows and consistency in performing a technical analysis. We have a lower low. All it took was for that wick. Now, some analysts will only use the close. So we'll be watching today to see, is this candle going to close lower than this previous low or not? And then if it does, that would validate a new lower low rather than just that wick. I'm not here to argue about if we should use the wick or not use the wick or wait for the close or not wait for the close. The argument I would make is to be consistent. If you use close in your analysis, then always use close in your analysis. Don't pick and choose to do it one way and then another day do it another way just because it happens to fit your bias better. We are still outside the expected move, of course, because we didn't go back up. But the distance away from that expected move starts to become important when we get around a 1 standard deviation. So just for easy ways to be able to quantify how far we've gone, remember that an expected move is a plus and minus of X amount of dollars from our current location. So last Friday, when we plotted the expected move, it was the market could move X to the upside or the market could move X to the downside. What you want to do now is measure that X and put it to the downside, since that's what we're focused on. We've now today moved the entire expected move in a single direction. If we were to take X, both X's and add them together, then from where we closed Friday to the low of today, at this moment, we've moved that entire distance. If we go beyond our current low, it very well could start to pick up a lot of steam. So something to be aware of today. We are not yet too far away from the 10-period moving average on the daily or the weekly, which means there is plenty of room for this market to move to the downside, and it would still not be oversold. I hate that phrase, but we'll use it. It still wouldn't be oversold at that point. While we're on this screen, we may as well take a look at it. It's next week's expected move. Now, that thing's not set yet. It won't be set until the end of the day. But all day today, it's going to be there, and it's going to be moving up and down with the current market. Right? Because what it's doing is that center line is the current price. And then the distance on each side is the expected move from here. Well, it's dynamic right now. It's moving. We need that thing to stay in a particular spot. All right, the volumes on the day, 137. That's not a surprise. If you notice, it's quite a bit higher than the other days that we've got here. There's a 143 back here. But on OpEx, there's often a lot more volume because they're rolling out of one and rolling into another, right? And it's messy volume that very often will muddy the waters if you're using any kind of volume analysis. Because now you're getting more volume or extra volume, but for no real particular reason. It's not like they're aggressively heavy in a particular bias, right? They're just maintaining a position and moving it. So this kind of volume can kind of throw people off. Just keep in mind, because it's OpEx, you're likely to see more volume. And we're still not anywhere near, say, the trigger level, 240, 250. So it's not like we're in extreme volume. All right, we are inside day breakout. The easiest way to kind of visualize that, there's yesterday's candle. We are outside of it. Simple as that, right? It doesn't have to be complicated. If you don't have an indicator that marks open, high, low, close, by the way, go out to your daily chart and mark the open, high, low, close from here, and then go back into your intraday chart. That way you don't have to worry about, well, which close should I mark? The 4 o'clock close? The 4:15? The 5 o'clock? So as usual, there's three things that a market can do. Stay within yesterday's range, break to the upside, or break to the downside. Obviously, we've already broke out. We're to the downside. So we'll go ahead and game that out first. We got an ADR half at 38.63. And we have a critical low that's a really important low, 38.83. Or 38.78 if we want to use that. Really, it's so close. You may as well use it. It's our own Globex low, right? If we break below our own Globex low today, things are very likely going to get pretty nasty. So 38.63 half, that's half of the ADR. The ADR right now is 2.8. The yellow line here, or the orange line, 38.23, that's the full ADR movement. So that's a 2% move from the close down to that level. But that's all common and normal We're talking about breaking a critical low today, and things could get very violent. So what we want to do is take this ADR and then spread it out and plot some more levels down here. Because if going to 38.23 would be considered just another day in the market, what would an extreme day look like? And that's what we want to be able to answer. Rather than getting out the calculator and doing a bunch of math, just use your drawing tool. It doesn't have to be exact and perfect unless you're some kind of wonky nerd engineer. That would get us down to 37.83. And at this point, we would just begin to consider that we're starting to get a little extreme. This isn't extreme yet. This is just starting to get a little extreme. Keep in mind that there is a historical precedent for how far the S&P can move. And then there are lock limits. And one of the easiest ways to be able to research big moves in the market is just to go back and research how many times have we ever triggered a lock limit before. Now, a typical extreme day, well, let's just start out with a normal day. Normal day is around 1%. A really good day is 2%. We start getting extreme when we get into 3%. We hit the edges of extreme around 4%. And then we get into oh dang when you get past that 4%. 4.5%, 5%. Something to keep in mind is most of the day is already done. If the market gives you a 24-hour trading cycle minus their 1 hour, and we opened at 6, and it's already 7, then we're 13 and plus hours into the day, right? So we're more than half done already. We're talking about getting to an oh dang level with less than half of a trading day left to go. Can we do it? Oh, I mean, yeah, absolutely. You've seen that move we made in the PPI the other day, or CPI the other day. So right now that 37.83 would be a 3.25% move. All right, that's a good place to start. Take it one more. There's your 4% move, 37.42. Now, I'm not saying we're going there. I'm just saying if things get extreme today, we absolutely could get there. And it would still not be considered like some crazy extreme, the world's melting kind of move. That would just be, oh yeah, hey, we made a 4% move. We just did that the other day. So it's not like couldn't do it again. Yeah. So a break below our current low is very likely going to drive us down to the ADR. It's a pretty good gap in between those two if you wanted to perhaps set up some levels. You could use the new quadrant lines that Thinkorswim has added. Now see the 50% is right there at our ADR. Out of my own curiosity, let's just back up and measure this big candle. All right, so the market set that really big candle at the open last night. If you was to measure that, we moved 50% of it and then stopped. We've got our 200, which it's really 100% of that big candle. That would be 38.70. That one I would mark out. Two, 3, 6, and my warning center at 111. So 38.76, 38.72, 38.70. Now we got some levels to the downside. Now a good double bottom very, very often goes lower than the previous low, which is worth kind of pointing out, right? So if we come back out here to the daily for a minute, we talk about this previous low. If a good double bottom should go lower than that previous low and then rip to the upside, it would make perfect sense that we need to come down a little bit more and then turn around and rally back up. Double bottoms are designed that way. Same with double tops. They're designed to go past the previous pivot point to trap traders. If it doesn't have the trap, then it doesn't exactly work the way it's intended to work. So just because we break through that level, and I've talked about how important and critical it is and how dangerous it would be if we break our current low, we may need to break that current low just to activate that double bottom setup, which is why we tend to talk about using candle close and not just, oh, price is at this spot. If you're looking to go short, maybe not just in the ES, but Apple, Google, whatever, SPY, the Qs, getting below and staying below this last pivot point should be more than just, oh, well, we wicked through it, so now I'm going to go short. You're going to want a candle close below that level, preferably on the week, right? And this is the end of the week. So on Monday, if we are below this low, then it would perhaps be a good idea to pile in on the shorts. But you got to kind of think, like, do you really want to try to go short now after we already moved from 41.75 to 38.75 in such a small amount of time? Tasty Trades makes the argument about the contrarian trade setup in a market situation where we moved really fast in a small period of time. They've got metrics to it, but it's like a 10% move in 7 days or something like that. You can go to YouTube and look up their videos. They went all around the United States teaching this. They had webinars and seminars, and they've made, countless videos on it. Just search for something like aggressive contrarian trade setup, Tasty Trades, something like that in the YouTube search engine. It'll pop up. The point being that you're not going to want to pile in on a bunch of short trades at this point. You should have been doing that, during the move. We're at the next pivot now. This pivot needs to be resolved. Let it get resolved today. That'll be the close of the week. You have a new week. If we open below this pivot, there's your, I don't want to use the word permission per se, but there's your activation trigger to take your short to the next low. what if we start to turn around? The first pivot we're going to want to focus on is where we opened last night, 3903. We do have a roundie in place that needs to be resolved. That'd be 3900. There's a cog line at 3911. That would close the gap, which right now is an unfulfilled gap that needs to be resolved. So the top of that gap would be a little bit of a magnet. Then we've got the daily pivot, which right now we haven't hit. So that's an MDP, a missed daily pivot. Again, a strategy that you can search for. I didn't invent it. It's been around for a long time. It's called an MDP. That'd be 3930. 3944, which would be the ADR half. The cash open from yesterday, 3947. The high of yesterday, 3977. And then a full ADR, 3984. And the weekly pivot point at 4009. The previous week's high is at 4077. Even if things got crazy wild today, I don't think we would get beyond that weekly pivot point high. So if we did just activate some crazy plunge protection team, rip your face off rally, that previous week's high could very well be a magnet once we start getting close enough to it, but I don't see that we would get past it. And we can certainly measure it from our current location. Yeah, 4.73%, but that's not the number that would be important. It would be from where we opened. Or even maybe perhaps from the 4 o'clock close. So it's within our reach. But it would take some extreme slick talking from the Fed on probably multiple channels, right? We would need the plunge protection team to come out with more than just one. We'd need multiples. All right, the volume profile, 10-day, 30-minute. TPO in blue on the right, volume profile in green on the left. We are outside the box. When we're outside the box, we have every expectation that we're going to come back into the box. There is a significant amount of trash over our head and no real shallow areas, so it's going to be a slog or a fight for any move up. And we don't have anything below us, so it gets very shallow, right? Because there's nothing down there. We do have an untouched point of control over our head now from yesterday that we could bring down or carry forward. And you're going to want to carry that forward every day until we come up and hit that. But for right now, it's just an untouched point of control. And that is at 39.25. Looks like gold's got a little bit of room left on that inverse head and shoulders down there. Well, now that I actually got it snapped, maybe not so much. Yeah, it's basically hit that 50%. No, there you go. A little bit of room left. Could get one more push up, 1677. The fact that Bitcoin is not crashing and burning and is actually sitting at the high of the pivot is a little bit encouraging, right? We've been using this for a proxy. It's certainly not a correlated market that I'm focused on here. It's the idea that this is a very risky asset, right? And if we see them bidding into a risky asset, it's because they've got an appetite for risk. It really is as simple as that. No reason to make it complicated. So Bitcoin's up this morning 0.5%. I mean, that bodes well. I like that. So kind of keep your eye on that. See if we cross back below the VWAP and maybe start breaking through yesterday's lows. If we lose this bid up space here in Bitcoin, I think that's really going to be one more nail into the idea that we could really break lows and get nasty. But the fact that it's bid up kind of gives me a little bit of hope. And hope is not a really good trade strategy, but a little bit of hope that we're going to maintain this low and stabilize here and perhaps begin to move back up. Bonds are basically flat this morning, a negligible amount. Seem to have a significant level of angle resistance to deal with. Should we break through that, we want to focus on this cyan line. That's the 4-period daily moving average. It's just plotted on my intraday chart. So if we cross that 4, we're going to be looking for a surge play. First, price crossing the 4, and then a 410 cross. Of course, price getting above 10. And then seeing that 410 begin to spread out as price continues to rise away from it, right? It would unfold over a period of days, but it all starts with crossing the 4. We tried last night and took a rejection off of that. We'll see what goes, right? Main thing here is we don't want to see the bonds get extreme. We don't want any big, wild, sweeping moves. Bonds and the dollar open at 8 and 8.20, respectively. But they both close at 3 o'clock. So kind of keep your eye on them this afternoon. Speaking of 3 o'clock, they petitioned to remove lock limits, and they got it. So when I was talking about how far a market could go and how extreme it could get, and how we've triggered lock limits before, but it's okay. Well, in the later part of the day, they took those off. They removed the lock limits. I'm pretty sure it's 3:30, maybe 3:15, but it's definitely somewhere in that power hour. They take the lock limits off. There is no lock limits, which means there's no net. There's no safety net. You fall off the building. I mean, there's nothing there. The rest of the market has lock limits, right? Equities have lock limits. They'll trigger halts. But the index futures do not have lock limits in the later part of the afternoon. All right, the dollar is starting to wake up a little bit. 110 right now is a significant multi-year resistance. Some really smart people are calling for that this is not done yet, and it's still going to continue to head to the upside. And that right now we're just in a little bit of distribution or chop or building a base. So keep your eye on that dollar. We don't want to see it get above 110 this week. And this week being today, right? This is the last day of the week. We really want to keep below that 110. Just also keep in mind that we're not done at 110. And, over the course of the next, 6 months, a year, we could very easily see those higher levels that have been called out repeatedly 115, 120, 125. The only thing I'm focused on right now is the dollar moving up is very likely going to put pressure on the S&P and the Nasdaq. So we don't want to see it going up. We want to see it holding still, maintaining inside of its own price action, and or preferably fading off. But we don't want any drastic kind of fall off the cliff moves. Right? We wouldn't want to see this go to $100 today. But certainly fade off of the highs, get away from that 110, break 109. I mean, that'd be pretty awesome today. 109.5 could very easily send us up past the cog line at 311. I'd say completely outside of yesterday's price action is possible if we could get below 109. All right, so with the VIX, kind of the same situation. We need this thing to calm down. We need it to back off. We're getting into kind of no man's land, the trigger for some arbitrage situations. VC funds don't have a choice, right? Volatility control funds, they don't get to choose. They have this set of rules that says volatility is X, you buy or sell. And that's what they do, like it or not. Now, those VC funds alone are only, like a couple billion. It's not like they're trillions and trillions. They're not going to be able to stack against, say, bonds. Bonds are huge, notional value-wise. But still, it's controlled selling. And it would be a non-stop, steady pressure of selling across the board in a basket of stuff. So if we get higher than the current high, and I'm using the VIX futures, you could use whatever VIX product you want, VIX, VIX9, whatever. If it has set a high in the Globex this morning, we don't want to see it get higher than that. If we do, we're very likely going to see the S&P touch that 3,800 area and possibly get below that 3,800 area. What I'd rather see is the VIX somewhere around that 25.5. And if we were to break yesterday's low, then we very likely could see the ES back above yesterday's high. So say right back up into that 4,000 area. Oil's waking up a little bit. You see we're back up to that $85 zone. Crude. There's a very large 2-bar reversal. I mean, it is a tick. It's a tick chart, so probably on a 15-minute or something, it wouldn't look quite so big. With the dollar, it's going to be simple levels. Are we inside of yesterday's price action, yes or no? And we want to see it maintain inside there. Just nothing crazy, right? Just nice and calm and everything be fine. All right, sectors that are up this morning. USO, a proxy of crude. IYH, the healthcare. XOP. Well, these others, I mean, they're just, my benchmark is 0.5%. So if they're not up at least that much, we don't really want to focus too much on them. Same thing on the downside. What's down and down by how much? The Qs are leading the way. Semiconductors right behind it. Well, I guess it wasn't done updating. IYT is leading the way to the downside. Transportation, which, I don't know, maybe I missed some news this morning. You would have expected transportation to do a little better if they've resolved the whole strike thing. Maybe they haven't resolved the whole strike thing. I'm not seeing anything on the news. I was just looking. Um, it's probably right under my nose. So if somebody else knows what's going on with transportation, wants to give a shout out, put it in the comments or whatever. Industrials would be the same thing. Rail had already put out statements that they weren't going to ship anhydrous. So, and then you had places like New with that bad earnings, and they were talking about how it was a lack of demand from um, commercial and enterprise institutions. So, is that consumer discretionary? This is where Tesla resides. And SPY, man, look at that gap down, right? Oh yeah. Could be setting up for an island reversal. All right, retail. We still got that higher high. Excuse me, higher low. Semiconductors. Tech. Not a surprise, right? Emerging markets. We use this for an entity, right? It's like a gauge of global risk sentiment. Oh, got an email yesterday from TrendSpider. They now have futures, which is pretty cool. I went to activate it. You got to pay for the futures data. It's fine, I guess. Not. I've already got futures everywhere else, so I don't need to have it on here. It would have been nice if they just add that to, if you're already running on a paid account. But whatever, it's connected with CME. If you are already a TrendSpider user, check your emails. If you didn't get an email from them, check your spam. You might have got one anyways. It's something that they've been working on for a while. But I think the data it wasn't extreme either. It was like $7 a month. I mean, that'll pay for itself if you're using this thing constantly. Gold also a part of that beat down this morning. Silver. Interesting enough, though, some of our defensive sectors are down this morning. Healthcare, utilities, staples, real estate. That's not what you would expect unless we're starting to get extreme, right? Because when things get really bad, there's no such thing as a defensive sector. Everything's going to go down. Go back and look at, say, February 2020 when, we jumped off the cliff and really started falling. There was no sector to get into, right? Everything went down. All right, the changes between these two numbers is getting smaller and smaller, meaning they're just about done with at least September's. Yeah, these are slowing down too. I wouldn't be surprised if we really stop seeing a lot of movement here by, say, Monday. This is for November. Yeah, see, this bottom one here didn't move at all. So it looks like they're getting close to being done with the repricing. Well, it's certainly not looking good. Usually when things are down, you can find, an alternative sector, say something that moves completely on its own, like pot stocks or commodities can often step outside of what's happening on the day. Energy can often step outside of what's happening on the day. But that's really not what we're seeing. So we could end up with a very high correlation coefficient this morning. It's interesting that Alcoa is up this morning. So the Bank of Japan came out and made a statement that 145 was it. They were going to implement controls and put a stop to this move in US dollar Japanese yen. And they shut it down at 145. It's been retested. The FXY is up this morning. But if you look at the dollar yen, I mean, we're off a ways. It would take a significant run to kind of get back up there and retest. Just kind of got my attention. I wanted to come over and take a look. I mean, it can certainly make the move. I don't see it happening today. So all these names down here that are in the green, this is a scan that I use that's only looking at weekly options. That's the only criteria. Does the symbol have weeklies? Yes. Okay, it goes in the list. And if you run that scan, you'll see that there's always something out there, right? I see a couple of energy names, or at least energy related, like rig. See some metals and mining names. Some names that I recognize from the short squeeze list. I'd definitely revisit that as we get closer to the open. All right, so we're looking at the S&P 500 pre-market change percent. I sort this because I don't want 500 names, I want 100. So I use market cap weight to sort it. We're kind of close to 100. It's not 100 names, but it's close enough. The size of the box will give you an indication of the market cap, and it makes it easy to see things, say, like the FANGs. They are the big boxes: Google, Microsoft, Apple, Amazon, Tesla. But you can also see at a glance what's going on out there this morning, right? Say transportation, utilities. Well, you can see UPS is down this morning, nearly 5.75%. Why? Earnings. Adobe is another one, obviously from yesterday, right? The thing is, Adobe had earnings yesterday morning and then the conference call yesterday after the close. So it wasn't any better, by the way. Whatever they said in the conference call didn't help anything. But we can see that, across the board, just about every category, every class is down or flat. So some of these energy minerals, they're not down that much. They're basically flat. Definitely the railroads, as a part of the whole strike situation that's been going on all month, but also very likely from sympathy with the UPS earnings. All right, NASDAQ 100. Pre-market change percent. We don't need the filter. We'll just adjust the color change. Obviously, mega cap stands out pretty easy. Whatever is doing good is also easy to see. So a very few small names in a sea of red, couple of gray that aren't really making much of a move yet. That's a pretty good hit to Amazon compared to, say, some of its monsters of tech peers. Google less than 1%, Meta, Adobe, like we just talked about, Adobe's earnings yesterday, kind of a continuation of that from the conference call last night. This is where we start to quantify, well, how bad is it out there? We're looking at the NASDAQ 100, and we're asking how many names in the NASDAQ 100 are down at least 1%. I mean, that's a pretty solid metric. 43. 43% of the NASDAQ 100 is down this morning, more than 1%. That's a very bullish number. I say bullish because you start to get into that contrarian sympathy. Maybe not for today, but looking forward, right on the other side of all of this. For this morning, I would expect this bearishness to dominate until at least we get into that lunch range. And seeing half of the NASDAQ down more than 1% in the pre-market might very well activate our alpha protocols. So watch for the high correlation coefficient as we come into the open. Remember, it needs to be at least 97 names. If you lessen the restrictions that we use on the alpha protocols to something less than 97, the consequences become really drastic. I mean, 1 percentage point really kind of takes a lot of profit off of that strategy. So I wouldn't do it. Another number that we can ask while we're on the same page is 0.5%. How many names in the NASDAQ are down at least 0.5%? 61. So 61% of the NASDAQ this morning is down 0.5%. That's bowed up bearish. You kind of want to look at the names that are leading the way and what industry or sub-industry they are. The semis are down, 1.25. Marvel 1.75. Nvidia more than 1.5. Now see, Microsoft continues to be the least hit. And we often talk about over the big picture, if we're going to continue to see, weakness across the board over the next, few months, that you want to continue to focus on the names that have not yet taken the worst beatdown. Not things like Meta or PayPal, right? Not those names that have been cut in half or more since last year, but names that have not yet taken the worst of the punishment, like Microsoft. And Google. All right, so that's the NASDAQ. I want to ask the same question for the S&P. How many names in the S&P are down at least 0.5%? 62. Well, since this is the S&P 100, we can put it in percentage terms, and we can say 62% of the S&P 100 is down this morning, more than 0.5%. That's a pretty bearish number. And then, by the same token, how many are down at least 1% this morning? 30. That's not as bad. It's pretty bad, but it's not as bad. Put them into their categories, see which ones have been down, are leading the way down. UPS, 6%. Of course, FedEx because of earnings, but just, step past that one. GE, Amazon, Union Pacific, Boeing. Now you can focus, again, you'd want to focus, likely, on the ones that have not yet fallen the most. Starbucks, JP Morgan, Apple, Bank of America, Qualcomm. These are the least down. Now the goal of going through this, or the exercise here, is to try to see anything that really stands out. And nothing is really standing out. I mean, it's that kind of morning where everything's getting the beat down. Not much of a surprise that nothing is standing out. But if you were to use this process on a day-to-day basis, you go in every morning and you're trying to put together the list, just keep in mind, kind of what the goal is. You're trying to funnel everything down, say from 600 optionable names out there, right? All those different names, there's just all this list of stuff, and you're trying to funnel all of that down into 2 or 3 actionable signals or symbols, so that as you come into the open, you're not trying to watch 30, 40, 50 names. It's basically impossible, right? Try to line up into the best names on the list Come out to their daily chart and see which one is giving you something that matches a setup or a strategy that you're using. IX10, Island Reversal, Inside Day Breakout, TRB, 52-week highs or 52-week low breakouts, something more than just, well, it's moving in the pre-market. I mean, dang, 60-something names are down, a 0.5%. Everything's moving in the pre-market this morning. That's too big of a list. When we go through those steps, you want to try to see, is there a particular sector, industry, sub-industry that you'd want to focus on? Obviously, right now, in the current environment, everything's taken the beat down, but it's not always going to be this way. And you want to kind of get into the habit of taking those steps, right? And kind of getting your routine put together, which is what this entire morning briefing is all about. Teaching you how to put together your own routine. I've tried to make videos on it, but there's just so many different paths that we can take based on what we're seeing that day, that what I eventually decided was a video wasn't going to do it. That it would be better if I just come in every day and I do the morning briefing live and walk people through the steps of what I look at and what I do. Sure, it took me an hour to go through all this, but on my own, when I'm not live streaming, I get most of this done in less than 20 minutes. It's a fast process once you put the process together. And that's what I want to encourage you to do, is put together your process. I look at it, all kinds of things that you might not be trading. So when you're doing your own, you wouldn't have to tolerate looking at a bunch of stuff that isn't of interest to you. You could hone yours down and put it into a language that works for you and look at names that fit your account size. Hope everybody has a good weekend. Stay safe, and I'll see you all next week.